So, what if I told you the absolute safest place you can put your money is actually costing you a fortune? I'm serious. Those savings accounts, the ones designed to protect your cash, are quietly, and I mean quietly, guaranteeing you a loss every single day. We're going to dive into this because honestly, what the data shows might just change how you think about your money forever.
All right, so first up, let's really tear apart this whole idea of safety. We're all taught to think of our savings accounts as this financial bedrock, right? The one thing you can always count on. But, well, the numbers, they tell a very different story. Just look at this number for a second. 17.6 billion pounds. That's how much real value UK savers lost in just 1 year. And get this wasn't because of a market crash or some crazy risky investment. No, this happened inside their own safe savings accounts.
Okay, and here's the crazy part. The math behind this is super simple. You see that first bar? That's inflation, sitting at 3.4%. That means your money has to grow by at least that much just to, break even. But the second bar, that's the average savings rate. It's only paying 1.94%. That huge gap between them? Yeah, that's your money's value just evaporating.
And this right here, this is the most important part. This isn't a potential risk, like the stock market going down. This is a dead certainty. It's like having a tiny, invisible leak in your financial boat. You don't see it on your bank statement in big red letters, but trust me, every single day, you're taking on just a little more water.
This quote just nails it, doesn't it? The illusion of safety is the most expensive investment mistake of our time. So, if we know that just holding cash is a guaranteed way to lose your purchasing power, what's the alternative? I mean, where are the smart, informed investors looking to avoid this exact trap?
Well, that brings us to a really interesting and, frankly, overlooked opportunity. We're going to talk about a market that I bet a lot of you have heard of, but maybe don't really understand. And that is the over-the-counter market, or OTC for short.
Now, I know what you're thinking. The first thing that pops into your head is probably risk, right? The whole Wild West of investing. But what if that whole perception is just completely outdated? Let's push past the reputation for a minute and just look at the actual facts.
I mean, look at these names: Deutsche Telekom, Roche, AXA, BNP Paribas. These aren't small-time players. These are global, multi-billion-dollar corporations. And guess what? They all trade on the OTC markets. This is a structured, regulated place, not some shady, back-alley exchange.
And the data totally backs this up. If you look at the very top tier of this market, the OTCQX, the median return for its 50 best companies in 2025 was a staggering 81%. And this is not some tiny niche corner of finance. We're talking $60 billion in U.S. trading volume and over 12,000 different securities. This is a serious, significant marketplace.
So this really brings us to a critical choice, right? Because the question is never if you're going to take a risk. It's which risk you're going to choose. With cash in a savings account, you're choosing that invisible risk, the one where your money is just worth less and less over time. With market investing, you're choosing a visible risk, sure. Your balance might go up or down, but one is a silent, guaranteed erosion, and the other is an active opportunity.
Okay, so to make all this a bit more concrete, let's look at a real-world case study. We're going to zoom in on one specific company, DBMM Group, and see exactly how these principles work in the real world and what a modern opportunity on the OTC market actually looks like.
So first things first, who are they? Well, DBMM Group is a U.S. public company. Now that might sound a little dry, but it's a really critical detail. It means they are fully reporting and totally compliant with the SEC. For you as an investor, that provides a level of transparency and oversight you don't get with a private company.
So what do they actually do? Their main engine is a company they own called Digital Clarity. And what it is an AI-powered consultancy that helps other B2B tech companies grow. So think of them less like a marketing agency and more like a strategic growth partner.
You might be wondering, why have this public structure at all? Well, it's all about getting a competitive advantage. It lets them do things their private competitors just can't. They can tap into capital markets for funding, they can access huge investor networks, and they can pour money into their own technology infrastructure. It's a total game changer.
Okay, now let's get to the problem they're actually solving. And this is not a small problem. In fact, it's a multi-trillion-dollar hole in the global economy.
$2 trillion. Yeah,
According to BCG Research, that's how much B2B companies waste every single year on sales and marketing that just flat out doesn't work. It's an absolutely staggering amount of waste and a massive opportunity for anyone who can actually fix it.
And this is precisely the gap that Digital Clarity is designed to fill. They've got this perfect mix: decades of expertise, a client list with huge names like Adobe and Xerox, and their own proprietary AI platform. The results? Well, they've documented revenue growth for their clients somewhere between 44 and 85%. That's huge.
See, this isn't just some startup with a cool idea. This is a company that's right in the middle of a major, documented transformation. The COO, Reggie James, basically said it himself. The foundation they've been laying, well, it's starting to bear fruit now. That signals a really, really crucial turning point.
Okay, let's bring all these pieces together. We've talked about the problem with safe savings, we've looked at the reality of the OTC market, and we've drilled down into the specifics of DBMM Group. So what's the actual investment thesis here? What's the bottom line?
It really boils down to 3 simple steps. 1, you have this massive $2 trillion problem of waste. 2, Digital Clarity comes in with a proven AI-powered solution. And 3, and this is the key part, that solution lives inside an accessible public company that seems to be hitting a major inflection point right now.
And hey, let's not forget the market that it's in. Just look at this pattern. The top tier of OTC companies, we're seeing 77%, 74%, 81% median returns over 3 straight years. This isn't some random one-off spike. This is a sustained trend of seriously high performance in this part of the market.
Ultimately, this kind of opportunity, it's really about seeing something before everyone else does. It's for investors who can connect the dots. The blue chip clients, the unique tech, that smart public structure, and see that early traction before it's obvious to the whole market and the price reflects it.
So we kind of end up right back where we started. When you're staring down the barrel of that quiet, guaranteed loss from inflation in your savings account, the real question completely changes. It's not, can I afford to risk looking at alternatives anymore? The real question is, in this environment, can you afford not to?